Junior gold miner DRDGOLD has come out with results this morning, reporting a 65% rise in its second quarter headline earnings per share to 33 cents. We now cross to the JSE, where the company's CEO Niel Pretorius is standing by to unpack the numbers for us. Niel, thanks so much for joining us today. Well, as I said, a 65% rise in headline earnings per share. And looking at the fact that we've had gold production steady and costs just marginally lower, one can only assume that this is largely attributable to that gold price sitting where it is.
Absolutely. No, it was all about gold price and all about cash flow. Our cash flow position improved quite significantly. It doubled quarter on quarter, and so did our operating profit. So the gold price was definitely a key dynamic for us in the last quarter.
Just looking at that gold price moving forward, big question is around sustainability and, in turn, sustainability of earnings like these, Niel, moving forward, where we know you're operating in a very high-cost industry. Having said that, you've also changed your focus and strategy where you're ceasing deep-level mining in a big way.
That is correct. Yes, we sold our last remaining deep-level underground mine. We've pretty much now become a long-capital gold factory. We do recycling of old mine dumps. And I think these are quite predictable. The costs are not significantly lower than other operators, but our ongoing capital investment per ounce produced is actually quite a bit lower. So from a cash flow perspective, it is definitely an attractive model.
Of course, the focus is going to be on the Crown resource there. What type of volumes are we going to see in terms of gold? What type of potential are you seeing from Crown going forward? And will this, as you say, it's going to be a shift towards surface tailings? Just give us an idea of the potential that we're seeing right now.
Yes. Helene, we have about 11 million ounces of gold in these tailings, which we can access. We're treating that at a rate of between 140 and 150,000 ounces per year. So we've got several years of production left. Our plant capacity is just on 30 million tons per year. So it's very much a high volume, ultra concentrated environment. But we have plenty of resources that can take us several decades into the future. Obviously, with these sort of volumes, you are always looking for ways and means to improve your extraction efficiency. And we're hoping to improve those over the next 24 months. By about 16%.
Is that where most of your capex is going to be dedicated, Niel, moving forward? I mean, where are we looking at this company spending money moving forward?
Absolutely. No, it's all about investing in technology to improve extraction efficiency. We can deliver vast quantities of material to our plants. Now we need to get more of the gold and other products out. So we'll also be focusing on investigating the feasibility of uranium going forward.
If you're looking at uranium, where do you see potential assets right now?
The price of uranium, was that the question?
If you're looking at uranium, which assets are you looking at right now?
Oh, the same one. The same material that we're treating for gold also carries substantial quantities of uranium. And with the technology improvement that we're planning for the next 24 months, we will create a concentrate that could potentially make the extraction of uranium also financially feasible. So we'll definitely start working on an improved feasibility. We've done a pre-feas, and we'd like to move that into the bankable phase now over the next few years, over the next few quarters, over the next 2 years.
At the same time, let's hone in on those costs and just how you're looking to rein in or mitigate some of those cost pressures moving forward, Niel.
It's very much a high volume environment, ultra volume environment. So it's all about economies of scale and critical weight. It's really optimizing extraction out of the material that we are delivering, because it's a high fixed cost component in our costs. So if we can improve our extraction technology, I think the cost per unit would remain pretty flat. Well, that's what we're targeting, to not have very high increases in cost by mitigating the impact of inflation through better extraction of the material that we're in fact introducing into the plant.
So Niel, it's more efficiency, it's better technology, but of course the inflationary environment is a big pressure point right now. Just talking to Amplat's CEO yesterday, he was saying that looming power shortages are a big concern for miners in general this year. We've got wage hikes potentially on the rise. Just give us an idea of the type of inflation that you're forecasting for the year.
Yeah, we believe it'll be about 10% year on year.
So that would be below what we saw last year with 14% year-on-year inflation, which was the average for the mining sector.
Yes, it depends on where your exposure lies. Most of your exposure in the deep level environment lies in electricity costs and labour costs, and obviously both those are significantly lower proportionate-wise in the recycling business.
Of course, Neil, a highlight for you over the period was your listing, moving your listing from the NASDAQ over to the NYSE. Give us a sense of the kind of response you're receiving from the US investment community right now in terms of their understanding of DRDGOLD's investment proposition at this stage.
Yeah. But it's very much focusing on the register. We want to fix our shareholder register. I think the business has come a long way, but now some of that value and some of that upside now also needs to flow to shareholders. And I think going into a stock exchange where gold investors, long-term gold investors, in fact trade, and they trade the underlying dynamics of the business, the fundamentals of the business, we're hoping to get a different type of investor in our stock, not just a gold player, but somebody who actually wants to invest in a gold mining company and who studies the fundamentals of the gold mining company. And we're seeing more and more of those coming into the register. Small numbers at this stage, but there's definitely a swing in the right direction.